Okay, so let us take a question today on consolidated financial statements. And what we deal here is basically your cross holdings. What happens is that in some cases, till now, what you have been looking at is you had a situation where you had a holding company which was owning shares in a subsidiary. Okay, 55%, 60%, 70%, and so on. What can also happen is that in some cases, the subsidiary may also hold shares in its parent. Let's say it holds 5%, 10%, 30%. Now, in such a case, when you prepare the consolidated financial statements of the holding company, you need to consider as to how to make an adjustment in the profits of each of these entities. Because what will happen is that H will have some part of ownership in the share capital and the profit of S. Similarly, S would also have some part of profits or share capital of H. So therefore, the issue which comes up for you is how do you kind of cancel out these intercompany kind of transactions? So let us take one problem on this thing. So we are told that the balance sheet of H Limited and its subsidiary S Limited drawn up as on 31st March 2011 are as under. Prepare consolidated balance sheet of H Limited. So there is a company called H Limited, there is a company called S Limited. H Limited is the holding company and S Limited is the subsidiary. We have the details of various items like equity share, profits earned prior to acquisition, profit and loss account revenue, other liabilities, then stock, debtors, investment. Well, what we note here is that H Limited holds 3,000 shares in S Limited. And simultaneously, even S Limited holds 2,000 shares in H Limited. So whenever you get these kinds of questions, the first thing that you should see is which is the holding company and which is the subsidiary company. Well, in this particular case, the advantage that you have is that they have already told that H Limited is the parent company and subsidiary is S Limited, and you have to prepare the balance sheet of H Limited. So maybe let us start and prepare this balance sheet. Now, please note the golden rule of accounting. The golden rule of accounting says that whenever you are preparing a balance sheet, a consolidated balance sheet, the golden rule of accounting has to be remembered, which is that every debit has a corresponding and equal credit. Now you must be wondering, this is not what we have learned. This is now how we prepare the consolidated financial statements. But what is the relevance of this? The relevance of this is that when you get these two balance sheets to start with, their totals are equal. So as you move each item out of this balance sheet, you should kind of ensure that you are getting an equal debit for this. Okay, now let me show you what I mean by this. Let's say forgive me for these lines. Okay, balance sheet of H Limited as on 31/3/2011. Okay, so the first item was stock. Stock is 4,20,000 for H and 1,60,000 for S. So I write stock H 4,20,000 S, how much was this? 1,60,000. There is no adjustment here, so I do a sum of these two and I get 5,80,000 of stock. Done. Now, do I need to do anything to these numbers? I guess no. So whenever this is the case, I mean, you can use either a sketch pen or a normal pen and you just put in a small tick here. This means that the number has moved out from here. So what happened? I had an asset of 4,20,000 and 1,60,000, which was the debit side. Corresponding to this, I had in the consolidated balance sheet 4,20,000 and 1,60,000 on the debit side. So 580 has come here. What does it imply? This implies that the debit aspect which was available to me here is completed in this. Let's move on to the next one. Debtors, 3,80,000, 2 lakh. So I write down debtors, 3,80,000 for H, 2 lakh for S. I do a sum of these two, I again get 5,80,000. Okay, I'm just moving out the easier one first and then we'll kind of move on to the next one. Investments. Now this is where the crucial things comes in, but this we will take once we are done with the smaller part of it. So other liabilities, 1,50,000 and 40,000. Other liabilities, 1,50,000. I do a sum of these two, I get 1,90,000 here. Done? Okay, very good. These are just creating confusion, so I'm just removing them. So I am done with these adjustments. Now this is what I am left with. Now H Limited has acquired subsidiary S Limited. Okay. So what happens is that some part of profit of S Limited, which is this plus this. So some part of these profits belong to H Limited. Okay. Now how much is that? Well, I really don't know. So I put in some stuffs here. Now what is it? How much does H Limited holds in S Limited? H Limited holds 3,000 shares. It's given here. And what is the total share capital of S Limited? It is 4 lakh. And each share is of 100. So 4 lakh. So 4 lakh when divided by 100 gives me 4,000. So the total share capital of S is equal to 4,000 and S holds 3,000 shares out of it. Right? So 1, 2, 3, 1, 2, 3. 3/4 of shares of S. Okay. So what does H owns? H owns basically, the profits which it has earned on its own. Right? Suppose, let us take it like this. So profits. Whose balance sheet are we preparing? We are preparing the balance sheet of H Limited. Okay. Profits. So there are revenue profits, which is 1,50,000. So H Limited has 1,50,000 of profits. Right? But some part of profit of S, as you must have been doing in your earlier questions also, is also belonging to H. And how much of that profit belongs to H? How much of that profit belongs to H? It's 3/4. Why? Because it holds 3/4 of the shares. Right? So it can be said that the profits, let's see it here. Profits of H is equal to 1,50,000, which is nothing but its own profit, plus 3/4 of profits of S. Why? Because it owns 3/4 of shares of S. Okay, but what are the profits of S? Do I know the profits of S? Well, let me see. The profits of S are, the revenue profits are 60,000. But is it this simple? No. Why? Because S also holds certain shares in H Limited. Right? So this 60,000, just like we are increasing the profit of H, we should also increase the profit of S proportionately. And what is the share of S? S holds 2,000 shares. So S out of 8,000 shares. These 8 lakh divided by 100 will give you 8,000, or 1/4 of shares of H. So S owns 1/4 of shares of H. So therefore 1/4 into H should also be equal to the profit of S. Right? So now we have reached a situation wherein we know that there is a cross tangling. Remember those algebraic equations that you used to do in your mathematics in your school? So this has become something like this. Now, just like we used to do there, what we will do is we will kind of equate the value of this. So I can also write this as 60,000 plus 1/4 into H. What is the value of H? H is equal to 1,50,000 plus 3/4 into S. Okay. Now the only thing you need to do is solve this equation. 60,000 plus 1,50,000 divided by 4. 3,7,500 plus 1/4 into 3/4 S will give you 3/16 S. So S, move this to the other side, minus 3S/16 is equal to 97,500. So you put in this as 16S divided by 16, or 13S is equal to 97,500 into 16, which means that S is equal to 97,500 into 16 divided by 3. So this becomes 1,20,000.